This is the reason why your fair value gap don't hold. How's it going, guys? Welcome back to another Spectre teaching. In today's video, we'll be covering high probability fair value gaps, and we're going to understand why the FVGs that you select never hold. So let's get straight into it, right? So the first thing that we need to know is where and when does the fair value gap form? So in other words, this is simply time and price. So we want our fair value gaps to form inside of a kill zone, right? This is the most high probable area to find your fair value gaps. Now, in terms of price, we're looking for our fair value gaps to be formed inside of a premium if we're looking to sell, or inside of a discount if we are looking to buy. Okay, so here we are back on the charts. So in this example, we can see that we are in a clear bullish order flow. We are running sell stops, as you can see, running lows constantly, and then we are moving upwards, creating fair value gaps, right? So if you want to get in line with this bias to continue buys, perhaps all the way to this high here, we want to first of all buy in the discount of the range, and second of all, we're looking for a fair value gap to be formed inside of a old kill zone, right? So marking out range low to range high, we can see this is the current bullish dealing range we are working inside of. If we then mark our premium and discount, again from range low to range high, we can see that we have this fair value gap resting just above range equilibrium, right? Just into the, just above the discount of the range. So if price comes a bit lower into the discount, respecting this fair value gap, this is a valid premium and discount array or discount fair value gap to look for longs to continue to the upside. So now we have our two criteria met, right? We have an FVG inside of our old kill zone, and we also understand that this could potentially be in the discount of the range as long as price comes down a bit lower, right? It doesn't need to exactly be in, the bottom 50%. We're looking for price to reach the bottom 50%, so the red area, whilst also respecting the closest fair value gap, right? So if we play this out and see what happens, you can see, during the kill zone, 8 a.m., we have red folder news that drives price into the discount of this range and into this fair value gap. If we now delete this and look a bit more into the context, you can see we've had an accumulation, a run lower being a manipulation into our high probability fair value gap. So now we can look for continuations to the upside. So let's go into a lower time frame and see where we can get involved. So on the 5-minute chart, here we are. This is our fair value gap, and we can delete this accumulation, all right? So you can see currently we are very bearish with this massive fair value gap, but you can see we created this intermediate term high. This is a high that filled in the fair value gap, this bearish fair value gap. So now we're looking for price to trade through this high, and that's our confirmation to look for longs to the upside. So let's play this out. And as you can see, price has now closed past this high, whilst also creating a fair value gap, which is still inside of our kill zone. So we can take a long here at this high with our stop loss beneath the low, and we can target this range high for a nice 2.15 R. Let's play this out, see what happens. And we eventually hit TP after a while. Now, you may be saying this is hindsight, you just picked this perfect example. This is not true. I've picked this example to illustrate to you guys a nice, clear, concise example. However, I did also signal this trade to the Discord members, and I will add a screenshot of that in the video right now. Okay, so there you are. So moving on from this concept, we're going to look at the next factors, right, that make a high probable fair value gap. So the next thing we are looking at is overlapping PD arrays. What do I mean by an overlapping PD arrays? Well, very simply, the two easiest PD arrays we should look for are either a breaker block or a mitigation block, which align with our fair value gap to give it more strength. Okay, so here we are back on the charts. Now for this example, this is going to be a scalp trade, and we're going to combine all of the factors that we have just learned, right? So the first thing we can see is a fair value gap made inside of our kill zone, and then this is also resting in the premium and discount, right? So this is in the discount of the range, the bottom 50% of the range. Okay, now the next thing that we are looking for, which I've just covered, are overlapping PD arrays. So you can see here we had a low, and then price traded lower, making a lower low, and then we traded through the high, creating a higher high, right? This creates our breaker. If we extend this line to the left, you can see this breaker overlaps with this fair value gap, right? For now, we just refer to the high. This is the easiest way to view breakers and fair value gaps overlapping. Rather than highlighting a specific candle, I like to refer the general area. So in this case, the high. The high overlapping with the fair value gap is what I will be focusing on. So now we're waiting for price to return to a discount inside of the fair value gap, overlapping with the breaker block, and then we will look for our long buys. Okay, so here we are, price trades lower inside of the fair value gap. We will now go into the 1 minute to see how we can get involved. So if we mark our premium and discount of the retracement range from range high to range low, as you can see, we have a very nice clear PD array to target. We have a bearish order block where price could reverse from, so this will be a very nice target or a nice area to partial to before holding your trade all the way to this high. So this is either your take profit or an area for partialing, right? You can easily knock off 80% of your trade here and then move your stops to break even and let the rest run. So let's see what happens, right? We need some confirmation now. Okay, and there we are, right? So price displaces, creating a fair value gap whilst also trading past and closing above previous old fair value gaps. So this is now a valid confirmation for me, and I'll be looking to enter this trade here with our stop beneath this low and a target here. So this is a nice scalp for 1.5R. This is very profitable, right? Don't be put down by low aura trades. If you can catch 1 or 2 of these a week with a very high strike rate, you'll be very profitable. Please don't fall into the trap of high aura. So let's see what happens. Okay, we get tagged in the trade. Perfect. Ultimately, you could have also waited for a return into this fair value gap for a bit of a better entry, but it's nothing majorly different, right? So let's play this out. As you can see, we are chopping a bit as we're coming towards the end of the kill zone. And then there we are, right? We do hit take profit very nicely, just a bit after the kill zone, right? So kill zone ends here at 10 a.m. and about 13 minutes later, we hit that full take profit for 1.5%. So there you go. Those are ways that you are going to identify your high probable fair value gaps. I hope this does help. If there are any questions, please let me know, or please let me know what wasn't clear and we can go over this again, perhaps in another more detailed video, or I can answer your questions in the comments. Feel free to ask any questions. I hope that helps, and I will catch you guys in the next one.